This is the last time we're going to look at BTab. And what we're trying to do now is take this trial balance that we had at the end of year one, and we're going to close out the income statement accounts. Balance sheet accounts are what they refer to sometimes as permanent accounts. They don't change from period to period. I mean, it will change as transactions happen, but just the process of time won't change them. So on the very last second of the very last day, if we then roll over the financial statements to the very first second of the very next day, so December 31st at midnight, to January 1st at 12:01, the balance sheet items won't change. Okay? They're going to remain permanent. They're going to remain constant. The income statement accounts, we want to zero those out. And if you remember, what we're trying to do with the income statement is we're trying to show performance over a period of time. The users want to know what was the income, and they generally want to know what was the income for the year or for the quarter. So we need to zero those out, because if we don't zero those out, what's going to happen is the revenues are going to continue to accumulate and the expenses are going to continue to accumulate, and you're going to have this blending of 2 years or 2 periods together. So we need to zero those out. And what I've shown here on the page is where we're starting with year one. You can see everything, particularly focus on the revenues and the expenses account. And this is the trial balance at the very end of the year. And where we're going to is the trial balance on the first second of the first day of the very next year. All the balance sheet accounts have remained constant except retained earnings, which we have now closed out all the income statements to retained earnings. And that's what this little short thing is about. How do we go about and close out those accounts, okay, to retained earnings? All right, so let me move that off the screen here. And let's do a closing entry. The easiest way to do a closing entry is if something's a debit, you credit it. If something's a credit, you debit it. And those debits and credits in the income statement accounts won't balance, but your balancing plug is then to retained earnings. So for example, in this case, we're going to debit revenues for $15,000. We are then going to credit operating expenses for $4,000. Supplies expense for $420. Insurance expense for $450. Depreciation expense for $4,167. And interest expense for $1,200. Now, if you looked at these two columns, if you added up your debits and added up your credits, you would see the difference is $4,763. And what we need to enter to make this journal entry balance is to put in retained earnings of $4,763. Now you will see if you add up all this column here, that will equal 15,000, which equals our debits. So our debits and our credits now equal one another, and we know this is a good journal entry because our debits equal our credits. And what we've done, in effect, is closed out all the income statement accounts, the temporary accounts, to retained earnings. Okay, so we are now done with BTab. It's now time for you to practice some of these on your own. All right.